as investors assess Australian trade data. And in commodities, WTI and Brent have taken a tumble after the release of EIA stockpile data. And in currencies, the euro weakens on bets of an ECB rate cut from March 2024, whilst the US dollar is steady ahead of non-farm payrolls. So we've got that all coming up in the show this morning, but let's have a quick look and see how volatility is doing and start with the VIX chart. You can see that volatility is higher on the day, currently up 1.14%, and that's after a month of lower volatility throughout November, but it's been edging slightly higher since Friday. And with 30 minutes to go until the European markets open, let's have a quick look at how the pre-market is looking across Europe. Well, first of all, let's start with the FTSE 100 set for a lower open, currently down 0.53%. France's CAC 40 also set to open in the red, down 0.37%, and the DAX in Germany also set for a marginally lower open at the moment, currently down 0.4%. Well, the FTSE closed higher yesterday with mining stocks providing support, while European markets also did close higher too, rebounding from mixed trades seen earlier in the week. Well, for the FTSE, it was industrial metal miners that led the gains, climbing 2%. As prices of most base metals and iron ore rose as well. Precious metal miners also jumped more than 1%, tracking higher gold prices, which we'll come to in a bit as well. But let's have a look at how things were overnight in the Asia Pacific region. So the Nikkei 225 closed down 1.76%. Hong Kong's Hang Seng also lower, down 1.02%, and Australia's S&P ASX 200 down marginally 0.07%. Well, the markets pretty much slumped across the board there as investors assess trade data from China and Australia, and we'll have more on the latest data from China in just a moment. Wall Street closed. Let's have a look at that. This is how the three main indices closed in the US last night. Well, the Dow Jones Industrial Average down 0.19%, S&P 500 down 0.39%, and the tech-heavy Nasdaq Composite down 0.58% as well. While stock futures flickered near the flat line Wednesday night as well. That was following a three-day run of losses for the S&P 500 and Dow Jones Industrial Average. You can see all three closed in the red. Let's have a look at how things are looking early trade this morning. So the US 500 set for a lower open pre-market as well, currently pretty flat. And as well, the Nasdaq also looking pretty flat pre-market, down 0.03%, and Wall Street flat too, just up marginally there, 0.01%. Well, investors will be waiting for the initial jobless claims data as well today, as well as non-farm payrolls, which is due out on Friday. Well, let's move on to economic data now in Australia, because we've got the latest statistics on its trade balance. Well, the Australian Bureau of Statistics reported the balance on goods rose to 7.13 billion Australian dollars in October, and that's up from 6.2 billion Australian dollars the previous month, and that was broadly in line with market expectations. Well, exports edged up 0.4%, helped by an increase in iron ore and other metals. Imports, meanwhile, fell 1.9%, led by a drop in industrial transport equipment. And now, if we just flick over to the price chart for the Aussie dollar and the US dollar. Let me just pull that up for you. Here we are. Well, the pair is marginally higher this morning, up 0.04%. It was it was slightly lower this morning in the earlier session, remaining under some selling pressure for a fourth consecutive day, following an earlier uptick as well, as I said, lower and now back up again. Currently at over a 2-week low, though. Traders will be looking to the initial jobless claims data from the US and non-farm payrolls on Friday for some impetus, which could alter the path of the Fed and influence the US dollar demand and provide a fresh direction for this pair going forward. Well, moving on to China now, and more economic data from there, because China's exports grew for the first time in 6 months in November. Well, China's exports increased by 0.5% last month from a year earlier, beating expectations of a 1.1% decline. This follows a fall of 6.4% in October. Imports, meanwhile, unexpectedly fell by 0.6%, following a 3% increase in October. Economists had anticipated a 3.3% rise. Well, if we just look at the price chart for the US dollar and then the yuan as well, as we can see this morning, it's down 0.12%. Well, the pair's marginally lower. Since the start of November, the pair has been on a downward trajectory. But since Monday, it's picked up slightly as traders also keep across those job updates from the US this week that could also alter the trajectory of the US dollar in this pair also. So we'll be keeping across that. Moving on to other economic data. Well, house prices in the UK. Well, the index rose by 0.5% in November, month over month. Expectations had been for a 0.3%, if to be 0.3% higher. Better than expectations then. We'll also be watching out for the sector as things open up this morning. Well, let's have a look at Eurozone data now as well, because the GDP growth rate is forecast to fall by 0.1% in the third quarter final estimate, with a year-on-year consensus of 0.01%. So that as well we'll be keeping across. And if we quickly look at the euro US dollar price chart, that's up marginally, the pair's up marginally 0.4%. The euro, however, has been trading at a 3-week low against the dollar, a 6-week low against the yen, and remains near 2.5-month low against the pound, the British pound. Traders are intensifying bets that the ECB will start cutting rates from March next year. There is now around an 85% chance that the ECB will cut rates at the March meeting, with almost 150 basis points worth of easing priced in by the end of next year. Well, on Wednesday, the Bank of France head as well told French media that the question of a rate cut could emerge in 2024. Well, the ECB will set interest rates on Thursday next week, but no change is expected. And the Federal Reserve and the Bank of England are also likely to hold rates steady next Wednesday and Thursday, respectively. Well, moving on over to the US now, because wholesale inventories are forecast to fall by 0.2% in October, month over month, and initial jobless claims should have risen to 222,000 last week. Well, yesterday, ADP survey data revealed that private businesses in the US hired 103,000 workers in November, below a downwardly revised 106,000 in October, missing expectations of 130,000. For this Friday's non-farm payrolls, economists expect 180,000 job creations. Unemployment rate is seen staying at 3.9%, and average hourly earnings are forecast to rise by 0.3% month over month, 4% year over year. Well, let's move on to things on the corporate front now, and we've got Frasers Group as well, set to release its first half results this morning. Let me just see if we can bring that up for you. Yes, we can. Here we are. So pre-tax profit came in at £310.2 million, and revenue was £2.68 billion. Well, the company announced a significant surge in profits during its full year results in July, which was attributed to the continued spending habits of shoppers, who have shown no signs of slowing down. And looking ahead, Frasers Group said then that it had anticipated profit before tax ranging from 500 million to 550 million for the current financial year. So one notable aspect of Frasers Group's success recently, though, is its strategic shift towards aligning itself with major brands such as Adidas and Nike, reflecting a desire to establish closer relationships with renowned industry players and enhance its market position. Well, over the past 3 years, Frasers Group has experienced remarkable growth as well in earnings per share. And if we just quickly pull up the Frasers Group price chart as well, I'll get hold of that for you. Here we go. We just pull that up for you. Well, the Frasers Group share price has risen by over 25% year to date and remains, as you can see, on an upward trajectory. Well, elsewhere, Dollar General is also due to report its quarterly earnings before the opening bell. Revenue is expected to rise, but EPS is seen as dropping. Well, earnings are expected to fall by nearly 50% to $1.20 per share. Revenue should rise by 1.9% to $9.65 billion. Well, Broadcom will also report tonight. The chip and software maker is forecast to post earnings of $10.96 per share on revenue of $9.28 billion. Well, since the 12th of October, Dollar General share price has been moving higher, up 33%. Meanwhile, let's move over to commodities and take a look at how oil prices are doing this morning, because they have reclaimed some ground after falling to a 6-month low yesterday. This morning, US WTI up 0.52%, trading around $69 a barrel, so under that $70 level now. And then if we move over to Brent, also higher, up 0.59%, also trading around $74 a barrel. Well, the markets were shocked by EIA data that showed production rising across the board. On the inventory side, data is mixed. Crude and distillate stocks fell, but gasoline stocks rose by 5.4 million barrels. Well, let's just have a quick look at gold before we go, because gold has been trading above the $2,000 level this week, and we saw it peaking on Monday. And it's still up around 2029 as well, up 0.19% on the day. It's enjoyed a rally, as noted there, as investors have been turning to the widely considered safe haven asset with geopolitics, the conflict in the Middle East, change to the dollar, and China's economy all playing its part in the price of gold. And let's just have a quick look at the price of spot silver as well this morning, currently down 0.03%. It's been on the decline since its peak on Monday, down, as I said, 0.29% on the day. Well, that's all we've got time for.